Welcome back, Metalheads. I'm Brad, and this is the Noble Precious Metals Report for Friday, July 23rd, 2021. And can you believe it's the end of another week already? It's amazing, especially with what this week has brought us through. We, this time last week, we were still riding high in blissful ignorance, hoping that things would go up. But instead, we wound up with dropping from the 26s all the way down into the low 25s by Monday. And then further down, we actually broke under 25 this week. And now we're kind of middling around and, the 25-20s on silver. Gold has been surprisingly resilient. Who would have guessed? We would have expected at least some drop there, but it's been pretty much holding steady above that 1800 mark, which is a nice sign. Before we jump into anything this morning, I just wanted to take a second and kind of circle back on a few things that were left open from yesterday. First, we had a couple of existing numbers that came out that I didn't report on, which were home sales. So we wound up with last month we had existing home sales of 5.78 million. Analysts were expecting a jump on that of up to 5.93 million. And then we wound up actually running kind of in the middle at 5.86 million. So we're still increasing on the new home sales, but not as fast as what analysts were expecting. So then we are looking at the index of leading economic indicators. And this one is kind of so-so. The previous period was a 1.2%, and analysts were forecasting that it was going to go down to a 0.9%. However, it actually dropped down to a 0.7%. So we just have to run with that and realize that, everything that keeps on coming out keeps on pushing that the economy isn't heading in a good direction. Things are slowing, things aren't moving as fast as they should. So we just have to kind of take that in context. Let's jump into the numbers and see where we go. Jumping into the hot topics today, we see that we have the market, manufacturing, and service reports. In general, the big board is mixed. Silver is down. Gold is also down. Silver retail is down. And gold is up, but who knows for how long at this point. So looking at the big board, we've got the indices are mostly green in early trading now. We're at about 1027 this morning. We can see that the Dow is up by almost a half point. The S&P is up almost a half point. The NASDAQ is up, almost a half point. The Russell is down almost a half point. So when we start looking into the other aspects of what's going on, most of this in the energy sector, we're down negative 0.33%, somewhere around there, except for natural gas and ethanol. Ethanol is up, wow, almost 7%. Natural gas is up 0.8%. So those two segments are going pretty good, but everything else is down a little bit. Same with grains, really. Grains are mixed all the way through. I'm not going to go through the whole thing with you. But once we get to metals, we can see that metals are having a pretty down day. Palladium's down 0.3%. Platinum's down, 2.8%. Silver is down 0.9%. Gold is down 0.37%. Copper is the only one that's showing upward movement at 0.14%. As I mentioned earlier, the reports that we've got going on right now, we have the market manufacturing, the PMI, which is the Purchasing Managers Index, and the market services report, PMI, which is the Purchasing Managers Index. And both of those are expected to do some small declines in terms of the outlook, which is keeping in line a lot with what we had seen last week with the economic reports, and especially the manufacturing. We didn't really do too much with service sector. However, a decline in that side also kind of makes sense quite a bit as well. Looking at the 10-year index or the 10-year treasury rate index, we can see that we're still on this interesting upward motion, which is making me a little bit more positive than where I was earlier this week. So if we go all the way back to the close on the 19th, we went from, the 16th was 1.31, so that was last Friday. Monday was 1.2. We wound up on Tuesday at 1.19, so we broke that 1.2 mark. But then we started going back up again. We hit the 1.28. We had a slight decline at 1.26, and now we're at the 1.3. So we're definitely on upward trajectory now. I would personally like to see this probably about 10, 15 basis points higher. I would like to see this in the 1.4, 1.5 range. Somewhere around here. If we're approaching where the average is, that's a pretty good place, and it just tells me, everything's right with the world and we can survive this economic crisis. But with it being as low as it is, it's just it's sending some mixed signals and really kind of causing some confusion and issues. And there are a lot of people that look at this, especially in light of increasing equities and everything else, and just wonder what the hell's going on. So moving into the silver market, we can see the entire week's view. So we can see everything that we did this week. We began the week when things first started up pretty low. I mean, we were at the 25.69. We then popped up higher. We went up into the 25.70s and then just maintained our slow decline all the way through. Now, as we started getting into the later portion of the week, and that was really about where we started bottoming out. We had hit that 24.83. We started slowly ascending all the way up. But the thing that I really wanted to point out, which I think is really kind of funny, if we start looking at various points here, we can see where there's some pretty rapid adherence on this 5-day VWAP. We start looking at these things, and in terms of an indicator, we can see where these movements just kind of move right off of these levels. And, just drawing this on here. And even as things don't get too close, I mean, some are directly off, like even back here. We've got this whole series, but if you're looking for guideposts that kind of tell you where certain things are going to be or where it's likely that they might be, the volume weighted average price, as I've harped on many times, is a very good indicator to show where certain levels of non-obvious resistance or support exist. And you can kind of look into that and really start to figure out, okay, is this going to bottom out? Is this not going to bottom out? Are we going to have a reversal? Something like that. So right now, right here at the 25.17 mark, I would look for, if it continues down, I would look for a reversal, at that 25.8, 25.9 level, which is the -1. So probably like, plus or minus 2 cents. And if it continued from there, I would look for further resistance down at the 24.94 level, which is that -2. However, if it goes up, I would look for upward resistance at, the VWAP at 25.22, things like that. So I would start looking at those lines. But additionally, I would start looking at where's the previous day and where is the intraday. And we can see that there's almost an intersection that occurs at the intraday and the previous day. Is that going to be a point of kind of a gravity well for where the price is going to wind up? I don't know. And no one does. Anyone that says that they do know is frankly full of crap, because no one knows where the market's going to go, because you've got two sides forever battling and trying to figure it out. So let's move on to gold. Now, gold, kind of the same thing. We've seen not a significant movement, even if we just kind of look at this from about this point. Let me throw on a straight line, and we can kind of see where the price began, and we haven't moved significantly far from that point. On the entire chart, we're at, it goes down really 1790 to 1825. So we're looking at really $35 worth of potential movement. And we can see up here that yeah, we had a high, and then we got down to a low earlier today. But even that, moving forward, we're not seeing these huge ranges that one would expect from anything in this price range. So gold has been very resilient for us this week. And it's really kind of interesting and surprising at the same time that given all of the news, the fluctuations, things like that, um, that gold has remained really as solid as it has. And that to me says that while silver is kind of indicative of more of the manufacturing aspect of, the softening in that sector of the economy, gold is more still the fair-haired child of finance. So it says that the banking industry and the financial industry and the places that really absorb and hold gold and value gold are still strong, which it's not to say that one drives the other in any particular instance, whether gold drives the finance industry or finance industry drives gold. It's kind of that symbiotic relationship that exists because they both fall within the same sphere of influences. We just have to kind of look at things and really take it into context and just keep watching. I mean, that's the biggest thing for price prediction, or I'll say price prognostication, is being able to look at what's going on in the various collaborative and correlated sectors, and really try to figure out, okay, if there's a dip in sector X, which affects metal Y, what's going to wind up happening to metal Y? Is it going to take a dip? By how much? So on and so forth. So these is just the important kind of insights that you'll look for in doing this type of analysis. And that's really why I build up these vlogs the way that I do, is so that we can kind of try to gather this information together and get an understanding of what's happening. So looking at the gold-silver ratio for today, we can see that the gold-silver ratio, the market-to-market is at 71.54, and the generic retail to generic retail is 62.92. In both cases, we've seen over the course of the week that we've had these rises. They've kind of risen commensurately. Then they also had kind of a small dip. They got down, and now we're seeing this slight uptick. So since really midnight, we've seen this incline in the price. Now, turning to retail, where do our retail values fall for retail silver? The first thing that we have to look at, we are seeing that defined decrease in price all the way through, going from the 1 ounce silver all the way to the maple leaf and the eagle. We can definitely see that the silver price decrease has really taken effect. We still have an average price of over $30 an ounce, especially on the generic silver. Everything else is much further above, except for the 10-ounce silver bar. We're seeing an average price that has decreased below the $30 mark at $29.97. That's actually a pretty decent deal being underneath, which is nice. So just looking at this from the average price perspective, if we look at the generic silver again, we can see that we've had kind of these ups and downs, everything else, but our distribution is all the way from a low price of $29.21 all the way up to a high price of $31.23, and the median price is actually riding below 30 at this point, incrementally at $29.77. So as we start looking at that, there does seem to be a lot of silver that seems to be available at a reasonable rate, at least under that $30 mark. So if you've been waiting for a chance to really see where things have decreased, now is definitely the time. However, something to keep in mind is that as we start looking at the actual premium that exists on each piece of silver, on average, we can see that these really haven't declined that much. So over 30 days, we began at an absolute dollar of $5.51 between spot and retail price on generic silver. We're down to $4.87. Now, at the same period of time, we're seeing that that was also at 21.18% or 21.2%. So that was kind of the margin over it. But right now we're down to 18.9 or 19%. So we have had a slight drop in the overall percentage as well as the total dollars, but it has not been significant at all. Even though the price has dropped a few dollars, it's still maintaining that distance, and it's still within, that margin of error, things like that. And again, these are aggregates, so it's not all of the retailers at any given moment. Turning to gold, we can see a little bit of a bigger change that's occurred. We are still up on retail gold. The price is largely positive, but as I kind of mentioned in the quick hits, we're still having this declining action. On the super premium, the American Gold Eagle 10th ounce, generic gold, is running a little bit low, but mostly flat. We are seeing some slight declines across the board. Generally, it's still up. I really don't consider $1 or $2 a decline. And again, that's really because of the amount that we're talking about. If you're saving $1 on a piece that's going to cost you $2,000, are you considering that a sale or not? Not really. No, I mean, at that point, it's almost a rounding error. It's something to really keep in perspective. I'm considering this not necessarily a positive, but more of a flat. Although over the last couple of weeks, I've seen this be more of a positive, so I'm just kind of justifying how I rank this at this point. But that's going into gold. So that's going to do it for this week. Thank you for tuning in and watching me babble incoherently at sometimes as I still try to find my footing on what I'm doing with this channel and how I'm presenting all of this data. It's been another exciting time, and my goal is to actually do 100 of these. So that's quite a Herculean task, but I figure by then I should at least have something there. If not, I'll have 100 little demo headshot tapes that I can probably solicit around Hollywood and see if they need some dorky guy to present charts for them. So anyway, if you like what I'm doing, give me a like, share, subscribe, throw me a comment, pass around a tip jar, whatever, it doesn't matter. But until next time, happy stacking.